So just about any highly appreciated asset it works for.
Who is, I know you mentioned obviously people with capital gains tax that they're trying to defer or reduce. So what are the most common types of clients you see, the most common situations you run into?
The number one is the business owner who's selling a highly appreciated business and, imagine has zero basis. And let's say he's selling for $10 million. He's going to pay 40%. It's going to get wiped out. Why? Because they really don't have a viable or even a attractive tax deferral strategy. They cannot do a 1031. I mean, the 1031 actually allows for it, but no one really practically does it. Only when people do 1031 is for like kind of real estate. So for the number one person is high-end business. We've done dentists, we've done veterinarians, we've done tech companies, we've done trucking companies, we've done just about anything you name, real estate companies. We can defer tax on the sale of business. So that's number one. Number two is the primary homeowner. Recent example is a $26 million sale in Newport Beach. The couple is getting a divorce. They lived in their houses the last 5 years, but as you probably know or may know, that it doesn't qualify for a 1031. So we help them defer $6 million in capital gains tax by using the Deferred Sales Trust. So that's number two. Number three is the commercial real estate owner. Now, they have the 1031 exchange, and they have opportunity zones, and they have the Delaware Statutory Trust. By the way, the Deferred Sales Trust is not a Delaware, not to be confused with that. But they still have options, okay? But where that falls short is what's called the 180-day sprint. They have to overpay oftentimes because they're faced with this tight time frame to close on those properties. Also, they have to replace equal or greater debt, right back to the 08 hit. That's what happened. So we solve those things, but also it's a backup plan for a failed 1031. So at the least, your listeners should consider, if I'm doing a 1031, what's my backup plan? All right, what happens if it fails? So we've saved multiple failed 1031 exchanges, and it doesn't take up one of your 3 slots. So those are the 3 primary ones. It also works for artwork and collectibles. It also works for private stock. It also works for carried interest. Okay, so carried interest is taxed as capital gains tax. So just about any highly appreciated asset it works for.